Hey everyone, this is Tim again, and I just wanted to give you guys a video on your FICO score and how that affects your mortgage rate. That's actually the most common question that we've been hearing since mortgage rates have been going up is my FICO score really a big difference on the interest rate? So this is a question that we're going to be hearing a lot more and more these days, with interest rates going up and up and up, and with nothing on the horizon making it look like it's going down anytime soon. I have a feeling this is going to be a topic that this video can run for quite a long time. So this video is just kind of something quick for my YouTube community in case there was any questions that you guys had. By the way, my name is Tim and I am a mortgage broker in the state of Arizona and Colorado. It's what I do full time. As mortgage rates and all interest rates are kind of skyrocketing right now, a lot of questions that we face is how can we get the best mortgage rate? And the most common difference between the lowest rate and the highest is the FICO score. Think of it like a teeter-totter, right? The higher the FICO score, then the lower the interest rate. The lower the FICO score, then the higher the interest rate. So you might think to yourself, wait, Tim, so if I just plan a month or two ahead of time, that could affect my borrowing costs, but by how much? And my answer is yes, absolutely. So today, I'm going to explain the difference between your mortgage rate, your FICO score, how they're both impacted together. That way you can plan to be in the best position to get the best rate whenever you do need to get a mortgage. Okay, so what I'll do today is we'll look at some different scenarios because there are tons of different scenarios out there. Everybody's scenario is completely different. We'll look at some different ones. That way you guys can get some ideas. Then we're going to start with is like a standard rate sheet with conventional loans, and you'll be able to see the different buckets for the conventional rate sheet, how the FICO score really starts to get hit with something that they call adjustments. And that's just a fancy way of the lender saying that they have additional risks. So they're making adjustments to the interest rate, which are expressed as a cost in actual pricing. But it's just a fancy way of saying, look, if you want to get the lowest possible FICO score, you're going to need two things: highest FICO score, lowest loan to value. That's all that that's all the interest rates are based on. Now, you might be saying to yourself, but Tim, are you saying that I shouldn't apply for a mortgage until I get my credit above 740? And my answer is no, absolutely not. What I'm saying is get with your lender as soon as possible to find out how to get to a 740 FICO score prior to locking the loan. And they can tell you. See, all of the loan officers out there have access to something called a credit simulator, which tells us how to get any credit score to any FICO score that we need. The sooner that you start working with your loan officer, the easier this process will be for both you and everybody else involved. All right, so before we get into the rate sheet and looking at the adjustments, let's talk a little bit about the FICO score and the FICO score buckets. All right, so the first FICO score bucket that you have is your 620 to 639. And this is the lowest bucket, meaning the most risk. It's going to have the biggest adjustments, okay? From there, you go from 640 to 659, then 660 to 679, and 680 to 699, 700, 720 to 719, 720 to 739, and then finally you have your 740 and better FICO scores. Now, some additional lenders do have additional FICO scores up to 760, but I'm just showing you Fannie and Freddie's adjustments, so we'll stick with the really easy stuff for now. Okay, so let's look at some pricing. That way you guys can see some live adjustments on the rate sheet. So here is your FICO buckets that we just talked about. So you can see your 740 and above. Loan to value is less than 60 or equal to 60. Then there are no adjustments until you get down to the 640 to 659 bucket and the 620 to 639 bucket, okay? Now, as you can see, when you move up in loan to value, 60% to 65%, based on your FICO score, There's going to be a little hit to the pricing, 0.25, 0.25. You're less than a 7. Looks like if you're less than a 720, so if you're in that, then you end up with a 50 basis point. But if you're the 720 and above, then you kind of end up with your best possible right there. And you can kind of see that flowing through in the next bucket of loan to value, 65 to 70, 6501 to 70. And then as you can see here, you really start to get a little bit higher, not so much with the 740 FICO, which is your top one. Your top tier is only really hit at two points, is at the less than 60% and at the over 95%, right? So other than that, you can kind of see that you know, as you go towards, we'll focus more on the 90% to 95%. We'll focus more here. You can see a quarter point, a half a point and a quarter, 2 1/4, you know, and then you start looking at, well, shoot, you know, maybe we should look at maybe an FHA, right? And then additionally, these are your cash out adjustments. I just wanted to kind of throw these on there because cash out is a little bit different than a purchase. This would be underneath of your rate and term or your purchase. The cash out does have different adjustments as well, but as you can see, they're pretty FICO score and LTV driven as well. Okay, so let's see. The next thing we're going to look at is if you weren't necessarily at that. If you weren't necessarily at that point of having the 740, then you might be good for something that we call a government insured loan, which is going to be something like FHA or VA. VA is going to only be for veterans though, but if you're not a veteran, no problem, they have an FHA loan. And as you can see here, by looking at the loan adjustments on your Govy side, really you have the two FICO adjustments. You have your 620 to 639, and that gets you that 1 1/4 hit. And then you have your 640 to 659, which gets you that 0.5% hit. So really you can kind of see there that the bottom line is that it costs a ton more to not get that FICO score. Okay, so the bottom line is in order to get the best interest rate, it's best practice to call your loan officer first, find out where you stand now, and what you need to do to get where you want to be. Now you might say to yourself, but Tim, I know my credit score because I have that Credit Karma, so I'm good, right? Not exactly. The apps like Credit Karma, while they will give you, and there are others out there, while they will give you what they call a credit score, it's not going to be a mortgage FICO score, which are totally particular to mortgages. Something like a Credit Karma can be a really good guide, but they actually disclose a little piece of information. Let me just show it to you on their website, which shows that it's a Vantage Score 3.0, which is totally different than a. All right, so here is Credit Karma, and see here where it says scores calculated using Vantage Score 3.0. Okay, so you can actually see that right on their disclosure on their website. And so the scores can be completely different. I've seen them by as much as about 100 points difference. So, but I mean, obviously there's different scores for autos. There's different scores for FICO scores for, there's 9 different, 10 different, I don't know, lots of different FICO models. So getting with your mortgage loan officer, you're going to get the model for a mortgage. Now, I hope all of this makes a bunch of sense. And if you'd like to know more about improving your FICO score, or if you just want to talk to a licensed loan officer, you can shoot us an email anytime at team@yourifmc.com. Someone on my team will get back to you very quickly. And if we can't help you out, because we're only licensed in Arizona and Colorado, we have the biggest network in the country of the broker community. So we'll make sure to get you with somebody that can help, a licensed loan originator in the broker community. All right, folks, thanks for listening. Remember to like, share, subscribe, and hit that ring bell. That way you get notified of my upcoming videos. and learn more about saving and spending money. All right, folks, we'll see you next time.